Welcome back to the deep dive. You know, our world runs on all these complex industries, right? And, well, some of them are so behind the scenes we hardly ever think about them.
Hmm.
But honestly, without them, everything just stops.
Yeah, grinds to a halt.
Exactly.
I know.
So today, we're going to pull back the curtain a bit on one of those really vital but often overlooked sectors. We're talking about the global lubricants market in the oil and gas sector.
Ew.
We've been digging into this really comprehensive report about it. And our mission really is to unpack the fascinating scale and some pretty surprising growth trends.
Yeah.
We want to help you understand just how critical this market is and, where it might be heading. Okay, let's unpack this.
It's amazing actually how fundamental lubricants are. They seem like such a small detail maybe,
Totally.
but without them, the massive machinery, all that complex equipment in oil and gas,
Yeah.
it can't function.
Right.
I mean, keeping everything running smoothly from upstream, the exploration, the drilling,
All the way through.
yeah, through midstream pipelines, ships, transport right down to downstream, the refining, the processing plants.
Mm-hmm.
It's one of those things that sounds kind of niche at first,
Yeah.
but when you look closely, you see this huge, often invisible global impact. What's fascinating here is just how pervasive it is.
And when you say immense global impact,
Yeah.
let's put some numbers on that, just the scale. In 2021, this sector, behind the scenes, right? It generated a staggering 34,266.3 million globally.
24 billion. Yeah. And that's really just the starting line.
Yeah.
This isn't a static market at all. What's really fascinating here is its consistent, steady growth path.
Right.
The report projects it hitting 38,994.2 million by 2025.
Yeah.
Pretty soon.
Okay.
And then get this, and even more impressive, 50,496.9 million by 2033.
Wow, over 50 billion.
Yeah. So that works out to a compound annual growth rate, a CAGR, of 3.284%.
Okay, 3.284%. So what's driving that steady climb?
Well, it's a mix of things. Part of it is just, ongoing maintenance needs. Things wear out.
Sure, basic wear and tear.
Exactly. Plus, continued exploration activities, rising energy demand globally.
Mm-hmm.
But it's also about increasing complexity.
Complexity, how so?
Think about, like, deep-sea drilling or those advanced shale extraction methods.
Yeah.
The conditions are extreme.
Right, high pressure, high temperature.
Precisely. And that demands really specialized, often more expensive, high-performance lubricants.
Mm-hmm.
Or consider extending the life of older infrastructure in mature markets.
Ah, okay. Keeping existing assets running longer.
Exactly. You need top-tier, long-lasting lubricants for that. So it points to this kind of hidden sophistication and vital ongoing investment within the market itself. It's not just about volume, it's about value too.
Here's where it gets really interesting, because those global numbers are huge, yeah, but the real dynamism, the action, kind of comes alive when you look region by region.
So
It's global, sure, but the growth engines are definitely louder in some spots than others, reveal some maybe unexpected hotspots.
that's a great way to put it. If we break it down, Asia Pacific, that region is really leading the pack. It's showing the strongest growth, the highest robust DAGR at 3.823%.
Over 3.8%, wow.
Yeah. This region alone, it's projected to grow from around $14.6 billion back in 2021
Hmm.
to a pretty significant $22.9 billion by 2033.
Almost 23 billion just in Asia Pacific.
Right. And it makes sense, given the pace of industrialization, the rapidly increasing energy demand across a lot of those economies.
Okay, so Asia Pacific is the powerhouse. But drilling down a bit,
Yeah.
are there specific countries really pushing that? Any surprises, maybe?
Definitely. I mean, you got the giants like China. Its
Mhm.
market segment is projected to hit almost $6.9 billion by 2033. Solid growth there, about 4% CAGR.
All right.
But the real standout, maybe the surprise, is India.
India.
Yeah. It shows the highest individual country CAGR mentioned in the source. A remarkable 4.541%.
Over 4.5%. That's significant.
It really is. It's climbing from about $2.4 billion in 2021 to projected over $4 billion by 2033. It's a huge indicator, really, of how rapidly India is expanding its industrial footprint, its energy infrastructure. They need more and more of these critical lubricants.
Makes sense.
And even, smaller players like Singapore show an impressive CAGR over 4.1%. Plays a key role as a regional hub.
Interesting. So Asia Pacific is clearly number one. What about other regions? Where's the next tier of growth?
Right. So after Asia Pacific, you see the next fastest growing regions are South America and the Middle East.
Okay.
South America showing a strong 3.552% CAGR.
Pretty healthy.
Yeah. And within that, Argentina stands out. It's got a notable 4.092% CAGR, projected to reach over $635 million by 2033. It often reflects, new exploration, new production, especially in unconventional oil gas, maybe.
Got it. And the Middle East?
Not far behind. A 3.501% CAGR. And here, the UAE is a highlight. Robust 4.081% CAGR, projected over $423 million by 2033.
Okay.
And there, the growth is really tied closely to sustained investment in, well, both existing and new oil and gas projects. They're constantly building and maintaining.
Right. So it sounds like Asia Pacific is booming with new development, South America and the Middle East also growing nicely, driven by their energy plans. How does that stack up against, say, the more established markets, North America, Europe? Are they lagging or is it just different?
That's a key point. It's different. In contrast, regions like North America and Europe, they show steady growth, yes, but it's comparatively slower.
Okay.
North America overall has a 2.6% CAGR, growing from about $8.5 billion to $11.5 billion by 2033.
Still big numbers.
Oh, absolutely huge. The U.S. makes up the bulk of that market, right?
Yeah.
Projected $9.45 billion by 2033. But interestingly, it's Canada within North America that actually has the higher individual CAGR, 3.368%, reaching over $1.2 billion.
Huh. So maybe more optimization in the U.S., more specific projects in Canada driving that rate?
Could be. It suggests maybe a market focus more on, optimizing existing mature infrastructure, maybe some selective new projects rather than broad expansion.
And Europe, similar story.
Pretty similar, yeah.
Yeah.
Europe sees steady growth, 2.801% CAGR,
Okay.
moving from about $6.7 billion up to $9.2 billion.
Okay.
Germany shows strong growth within Europe, 3.485% CAGR. The UK isn't far behind, about 3.18%. But then countries like France and Italy show more, let's say, modest rates.
So again, maybe more focus on efficiency, longevity.
Seems likely. The emphasis might be more on those high-performance, specialized lubricants for extending asset life, improving efficiency, squeezing more out of established industrial bases.
Makes sense. What about Africa?
Right. Africa also contributes. It's advancing from about $720 million to nearly $1.1 billion. That's a 2.622% CAGR.
Okay.
And South Africa and Nigeria are mentioned as key contributors to that growth.
Got it.
So if we connect this to the bigger picture, it really underlines how global energy demands and just industrial activity are shaping these very specific market needs differently across the world.
Okay. So pulling all these threads together now, all these numbers, regions, growth rates, what's the big takeaway for us, for the listener? It feels like these numbers really hammer home something fundamental, doesn't it? This consistent, undeniable need for reliable, high-performance lubricants.
Absolutely.
It's about keeping equipment efficient, making it last longer right across the entire oil and gas supply chain. It's not just finding new oil.
No.
It's keeping what we have running optimally, safely, and for longer.
You've really hit on the core point there. It reinforces that largely unseen nature of this market, because regardless of all the big discussions about the future of energy,
Right.
the existing infrastructure, the rigs, the pipelines, the refineries, all of it needs constant, careful maintenance.
That's absolutely correct.
Lubricants are right at the heart of that. It's non-negotiable. And that consistent demand, well, it basically ensures the market's strong future, makes it a surprisingly stable yet continuously evolving sector.
Stable but evolved.
Exactly. But this raises an important question. What does that increasing complexity, we talked about deep sea, unconventional drilling, what does that mean for the types of lubricants needed? Could that shift future growth patterns even more dramatically? That's something to watch.
That's a great point. So the key takeaway here, crystal clear. This global lubricants market in oil and gas, it's often unseen, it's specialized, but it's not just a multi-billion-dollar industry. It's one on a consistent, pretty robust growth path.
Definitely.
It's just a powerful reminder, isn't it, how these seemingly small, specialized bits are totally essential. They're like the quiet engine driving these massive global operations.
Yeah, my aha moment here is really seeing how even these specialized markets, the ones that seem niche, are actually incredibly dynamic.
Right.
They're deeply tied to global energy demands, crucial for industrial efficiency. They're almost like a quiet barometer of global industrial activity, something that's really easy to just overlook.
Totally overlooked. And, well, that kind of leads to our final thought for you, the listener,
Right.
maybe chew on. If an industry as seemingly specialized as industrial lubricants can show this kind of robust, vital global growth, What other invisible sectors, these crucial support systems, might be quietly propping up the world's economy that we rarely stop to consider?
Yeah.
What else are you overlooking that truly makes things run? Welcome to the deep dive. Today, we're plunging into an area that's absolutely essential to global energy, but it, often operates quietly behind the scenes. We're talking about the vital world of lubricants within the oil and gas market.
Right.
We've really dug into a whole stack of sources, articles, research papers, industry notes, you name it. And the aim here is to pull out the key forces driving its growth, the significant challenges it's facing, and also the really exciting trends shaping its future. Think of this as your shortcut, maybe, to understanding a surprisingly dynamic and critical industry.
It really is. Most people vastly underestimate the complexity and, frankly, the sheer importance of this industrial segment.
Yeah.
Understanding these dynamics, it offers a unique perspective on a vital part of our global energy infrastructure. So yeah, prepare yourself for some truly surprising facts and I think definitely a few aha moments
Okay,
about how these specialized fluids are keeping the world running and evolving.
great. So let's jump right in then. As we went through all that material, what immediately jumped out as the primary forces pushing this market forward? What are the key drivers here?
Well, the first major driver that becomes crystal clear, really, is the sheer intensification of exploration and production activities globally.
Okay.
It's not just more drilling. What our sources are showing is that as global energy consumption keeps climbing, we're not just expanding operations, we're also pushing into far more extreme depths and temperatures in new exploration sites.
Right.
This ramps up drilling, extraction, and well servicing operations to, well, an unprecedented degree.
So when you say extreme, what are we actually talking about here? Because I imagine that creates incredibly demanding environments for the machinery.
Exactly. Yeah, think about what's happening deep underground or maybe on an offshore rig. You have parts grinding together under pressures that could, I don't know, crush a submarine. And at temperatures hot enough to boil water instantly, without specialized industrial-grade greases and these high-performance fluids, these machines would just, well, they'd weld themselves solid.
Right.
They're absolutely non-negotiable for preventing wear and tear, slashing unplanned maintenance, and ultimately ensuring the longevity of multi-million-dollar equipment.
That makes perfect sense, and it really highlights the link to efficiency, doesn't it? So the right lubricant isn't just about making things run smoothly.
No.
It's about making them run better and for longer.
Absolutely. And if we connect this to the bigger picture, it points directly to this growing need for equipment efficiency and lifespan optimization. Refineries, offshore rigs, they're operating under intense pressures and temperatures, yeah. But the right lubricants aren't just enabling movement, they're delivering exceptional thermal stability, superior friction management, and crucially, corrosion resistance. This translates directly to keeping production continuous, minimizing costly component failure, and helping companies manage their operational budgets far more effectively over the long term.
Yeah.
It's really not a cost center, it's an investment.
Right, an investment. And beyond just the performance side, there's also a strong focus on safety and compliance, which I imagine is absolutely paramount in an industry like oil and gas. How does that drive the lubricant market?
Yeah, that's a great point. It raises the question. How do you ensure safety in such, volatile environments? What we're seeing is that globally, regulatory bodies are stepping up. The material highlights how they're mandating certified lubricants, ones that meet really stringent standards from organizations like API, that's the American Petroleum Institute,
Oh, okay.
ISO, the International Organization for Standardization, and also specific requirements from the OEMs, the original equipment manufacturers themselves.
Ah, right, the OEM.
So companies are investing in these advanced formulations, not just for performance, but also to ensure safe, leak-free operations. It's a clear move to reduce risks and significantly improve workplace safety, which is, as you said, non-negotiable in this sector.
Okay, so we've seen what's pushing it forward, strong drivers there, but what's holding it back? Because every market has its headwinds, right? And this one's no exception. What are the big challenges slowing down the lubricant market in oil and gas?
Well, one of the biggest challenges our research points to is the significant volatility of crude oil prices.
Yeah, always a factor.
Always. When global prices take a dip, oil and gas firms often, tighten their belts. They cut back on what they might see as non-essential expenditures. And yes, sometimes that includes lubricant upgrades or investing in the higher-end premium products.
That sounds like a pretty direct impact then, but does it go deeper than just those immediate budget cuts? Is there more to it?
Oh, it absolutely does. The real insight here isn't just the budget cuts themselves, but how this crude oil volatility creates a kind of devastating boom-bust cycle, but specifically for innovation in lubricant research and development.
Oh, interesting.
Yeah, it makes long-term investment in cutting-edge formulations incredibly risky for the manufacturers. And this leads to really inconsistent demand for those premium products, affecting the overall market flow and, crucially, that innovation pipeline for new, better solutions. It's kind of a hidden cost of these volatile markets.
Wow, okay, I hadn't really thought about the impact extending all the way back to R&D like that. That's a much deeper ripple effect. What other major headwinds are we seeing?
Another significant factor is the increasing pressure from environmental concerns, specifically tied to lubricant usage and disposal.
Right, sustainability.
Exactly. As sustainability becomes more and more central in industrial policy, oil and gas operators face mounting pressure to manage waste more responsibly. The challenge is that used lubricants are often classified as hazardous waste, and they're costly to dispose of properly. And that reality pushes many companies to either find ways to reduce their overall usage or perhaps make the switch to greener alternatives, which, can in turn dampen the traditional lubricant market growth.
And what about the cost factor? You mentioned those synthetic and the specialty lubricants earlier. Those sound like they'd be a premium product.
They definitely are. And here's the trade-off, right? While these advanced products undeniably outperform conventional mineral-based ones in many aspects, offering better efficiency, longer equipment life, enhanced safety. They also come with a significantly higher price tag. So in regions maybe with thinner profit margins or just higher price sensitivity, operators often default to the cheaper mineral-based lubricants.
Just to save costs up front.
Exactly. It's a choice where those short-term cost savings get prioritized over the long-term benefits like efficiency and innovation that the advanced lubricants could provide. And ironically, that can lead to higher operational costs down the line from more wear and tear.
Okay, so despite these barriers, the price swings, environmental pressures, cost issues, here's where it gets really interesting. How is the market evolving? What are the transformative trends pushing it forward again?
Yeah, this is the exciting part. One of the most prominent shifts we're seeing is definitely toward bio-based and eco-friendly lubricants.
Ah, the green stuff.
Exactly. These products offer really critical benefits like biodegradability, reduced toxicity, and importantly, they comply with an increasing number of new environmental regulations. Whether it's for offshore drilling or maybe onshore pumping stations, these biolubricants are gaining significant traction. They're seen as both a sustainable and a regulatory-friendly alternative. They're becoming a real game changer for companies aiming for that greener footprint.
And on the tech side, our research mentioned the adoption of IoT-enabled monitoring systems. That sounds pretty cutting edge for lubricant management.
It absolutely is, and it's proving transformative.
Yeah.
Basically, the integration of smart sensors and AI-driven analytics allows operators to track lubricant performance in real time,
Okay.
sometimes down to the molecular level, actually.
Yep.
This capability enables highly effective predictive maintenance strategies, which means they can service machines before a failure occurs based on the lubricant's condition.
Right, instead of just waiting for something to break.
Precisely. This not only extends equipment life significantly, but also reduces unnecessary lubricant consumption because you're changing it based on need, not just a schedule. It's an approach that is both cost-efficient and environmentally sound, which is, a rare but really powerful combination. It's moving from reactive maintenance to truly proactive optimization.
That's fascinating, predicting issues before they even happen. Very cool. And finally, the material pointed to a clear move toward customized lubricant solutions, often developed in partnership with those OEMs you mentioned, the equipment manufacturers.
Yes, this trend is all about precision and optimization. These tailored formulations are designed, sometimes from the ground up, to suit very specific engines, compressors, turbines, often developed hand in hand with the manufacturers of that equipment themselves.
So really bespoke fluids.
Pretty much.
Here.
The goal is to ensure optimum output from that specific piece of machinery, meet its particular warranty standards, and just offer customers a more personalized, high-performance experience. All of this, it fosters deeper brand loyalty between the lubricant maker, the OEM, and the end user. And it significantly improves operational reliability, giving companies a real competitive edge. So, as we kind of wrap up this deep dive, it's clear that while the lubricants in the oil and gas market faces its share of pretty significant regulatory and economic challenges, the unmistakable direction for future growth lies in this powerful push toward smarter, greener, and more customized solutions. Whether it's through digital transformation like IoT, the rise of biolubricants, or that deep performance optimization, the market is actively embracing change. It has to really to meet the complex needs of such a dynamic, high-demand industry. It's kind of a quiet revolution happening.
A quiet revolution. I like that. So what does this all mean for you listening in? Maybe consider how these seemingly small, specific advancements in industrial lubricants, things we rarely think about, are quietly driving these monumental shifts in global energy production and also environmental responsibility. It potentially impacts everything from, well, the cost of your energy to the health of our planet. Something to think about. Thank you for joining us on this deep dive.